If you want to learn how to trade just like me, join the community, click the private Discord link, sign up through this membership level, and you will gain access to weekly group mentorship calls for free. Last few days have been very exciting because pretty much since the beginning of this month, we've just experienced up only. Now, there was a red candle in between there, but we've pretty much just been going up in a straight line. So getting rejected right now is not out of the ordinary, guys. I know we had a target at $130, but I did mention that there were key levels of resistances at this point between 117 and 100, and let's see what this wick is, 115. Let's call it 115 to about the 117 where that body is. So this let's just call it $2 to $3 range of resistance is where we're getting rejected at right now. And if we turn on the drawings, you'll also see that this is a 0.5 Fibonacci. So that's pretty much why we're getting rejected as of now. It's a 0.5 Fib, and as you've already seen in the breakout, we're essentially after this bullish reversal wave being created back over here where we broke out this key level of resistance that we're struggling with pretty much the most of November. The reversal wave was created when we broke out. So now that we've met a key level of resistance, we're falling back after creating the bullish reversal wave, essentially just doing a retest of it after breaking out. So if we could actually find support above that point, we are looking for the continuation and eventual break of $117, so we can hit this between $125 and $130 technical target of ours out of this breakout over here. Now this technical target, if I go to the weekly time frame, this yellow line that I have as a target is out of this inverse head and shoulders pattern, which has a neckline at about the $102 mark, as well as using the 55 moving average, knowing that that's a key level of resistance at 107. Once those two are cleared, then it's free reign to the next targets, well, to the technical target, but then also using the fibs, it's going to give us some further levels of resistance. So we had the 0.5 Fibonacci as well as the 1272 using the fibs of this dump over here. So we've got multiple confluences, multiple confirmations or reasonings for why this is a key level of resistance. So that's essentially why we're getting this rejection right now. So after the reversal wave was created, we're essentially on this dump over here trying to confirm that as support to give more validity and more chances of Quant breaking up to the upside eventually. So right now we can see that we're about to form a golden cross. However, it's on the daily time frame. So this has got a lot of accuracy. If it was on the 4 hour, I would say let's see it happen on the daily as well. So this is all sitting at the 0.5 Fib. 102, 103. It's also the neckline of the pattern itself at about 102, 103. Remember, we called out on the weekly time frame. So if we see this crossover, it's going to confirm this breakout. If we do not see it crossover, we're going to have a throwback underneath it and invalidate those targets to the upside with what's happened with Quant this bit from the beginning of this month all being fake. Essentially, if we go ahead and lose the neckline over here and flip it into resistance, this would be the 200 EMA, the 55, the yellow line, as well as the 0.5 Fibonacci. All of this area, this whole entire area needs to hold going forward. As it's only $2, $3 above 100, you're also going to mention that that's a psychological level. And so it's this $2 to $3 area over here that going forward cannot be lost whatsoever. That is how we invalidate this target to the upside. So if we can now find support above that point, with the closest being the 786 and the 618 over here, this nice area of support right now between 105 and 108, can we now confirm this as support with today's daily candle close, suggesting that not only have we broken out of the range high, but actually just falling back to it, confirming it as support, confirming this reversal wave, looking for the continuation to these final targets. Well, it's not actually the final targets, but the next very key level of resistance, which, remember, if I showed the explanation of what the Fibonacci tool is, essentially we know the market does not move in straight lines. There's bounces, there's pullbacks, and these pullbacks are going to be suggested to you by the Fibonacci. So I'm going to draw these massive waves up and down, and after a wave up, you'd say it's not going to keep going up like this, we need to pull back, and that's where the Fibonacci tool comes in, and it gives you the golden pocket. That's where you use as an optimal entry point. Equally, after coming down so much, it's going to pull back to a golden pocket and then continue lower. So with those examples, what we're going to do right now is go back to the current chart. And what we can see over here, pretty much since January of this year, we've come down And what is going on right now is a retracement into the golden pocket. So the next move would be downtrend continuation, correct? No, wrong. So even though I just explained that all to you, it doesn't mean it's 100% going to happen, because we can invalidate the continuation to new lows if we can find higher lows after this initial pump over here. Because what you need to realize is that this is also a move that I need to use on the Fibonacci's, where the golden pocket will come in play around this area, and then us falling back to that key area, looking for support to break out again, and then going back to the old one that should see new lows. We're breaking through that level of resistance, creating a larger reversal wave where we will head to $250. So I know that was a lot confusing. If you want me to teach you it will take some time, but I've got all the things in place for you to go ahead and master that and be able to predict where the market is going. Just use the links down below to head straight to the website, or message me on twitter.com for more information about it all. But we're trying to invalidate that new low, and the process of doing so is getting a rejection from here but failing to put in that new low. And in today's update, I've actually shown you already the areas that need to hold a support, with the lowest point being $100. If we want to see this continuation for an eventual break of the higher end one to flip it into support, creating the larger reversal wave for continuation higher. I know that might have been all confusing, but let me now zoom into the most recent range that we've been in since October and try and explain it, because it's already done the opposite creation of the reversal wave, and it might be easier to show you with something that's already done it. So remember, again, you have a big push down, you use your Fibonacci tool. This is the golden pocket. At that point, we're trying to sell, so the move up is like a false move up, trying to trick you, and then we continue lower. However, the reversal wave is created if we break through that point, which gives you a different trajectory. So that would be a bullish move. So essentially, we've measured this push down, and it's giving us the golden pocket, which we're meant to run into and then look for new lows. But as you can see over here, on this rally up into there, we created a higher low on an opposite golden pocket. Let me show you that, just so you're not in disbelief. Right there, boom, you met a different golden pocket, and with that, we're catching support to break the higher end one. That is essentially what I'm trying to suggest on the higher time frame over here. We're pulling back into a golden pocket, looking for new lows below 84, but we know we're trying to invalidate that. So pretty much around the halfway mark of this move up is essentially giving us the golden pocket around this area. Fall back to it to confirm its support, so we can break the opposite one, create the reversal wave, so we can see higher price targets than 168 all the way up until $250. If it's not easy for you, consider taking action on education, or try and follow up with all these updates that come out every single day, and it should get a little bit easier for you guys. Thank you so much for tuning in. Like, subscribe, comment, and share these updates. Again, if we lose this key area of support being the 0.5, the $100, the moving averages, the neckline of the pattern, we're invalidating that continuation and already looking for new lows. Okay, but right now let's just confirm this support so we can get into that area in the first place. Cheers, everyone. I've got a whole bunch of educational content, and over here on the website you can see loads of other people taking action recently. If you want to get educated, simply scroll underneath the video, click take action or Linktree, and click the option that you want to read more about, or private message me on Twitter. Let's start off with the ebook. This is where you can take action on my ebook, teaches the exact strategy. Head over to the membership level if you want to become a Discord channel member, where you have access to 2 weekly group mentorship calls, or if you want to take action on my 6-hour-long pre-recorded course, there's an offer here, and you do get Discord chat for 2 months totally free. Here is my beginner one-to-one mentorship plan, which includes 3 hours of my one-to-one help, the course, and 2 months free in the chat. And there are some other plans here for 5 or 10 hours of my one-to-one help. Use the links down below to private message me on Twitter, or head straight to the website using one of these links to take action. Cheers.